We'll get into the topic. The big question that everybody's got, and if you turn on any of the Bloomberg or CNBC and all these places, the big question is, when is the Fed going to lower rates? And that I don't know how many of you guys were watching today and saw Jerome Powell speak, but they held the rates today. We're still in the 5 to 5.25 range for the federal rates. He paused this time around. I think they said first time in 12 months or 15 months. I don't know how many months now, but anyway, he paused. But they're saying that they're going to have 2 more hikes here this year, and that we could be to 5.6. Some people are saying we could get to 6. For the federal funds rate, by the end of the year. I'm going to go out on a limb here and say nobody really knows. These guys in the Federal Reserve, Jerome Powell and them, they might know what they're going to do. And kind of one problem that I see right now as a real estate investor, it might not be a problem for the market overall, because it's good for the market to have downturns. You can't, just have an upturn forever. And this is kind of a good time for a downturn, I guess. And then, you get a chance to buy, and then, we have a good downturn, and then we're going to have a good upturn again. But I will say something that I heard on the news the other day that was kind of concerning. I was watching Bloomberg, and they were talking to Jerome Powell, and they were asking Jerome Powell. It was a long interview they were having with Jerome Powell, and they said, "Hey, what is Joe Biden talking about with you when he has meetings with you, and they're having meetings about the federal funds rate, and what is his input on what you're doing here to try to curb inflation?" And Jerome Powell said, "I've never talked to Joe Biden." And so that's kind of concerning that that they're just kind of going off on their own, and it kind of seems like they're just doing what they want there, and we don't really have anybody standing up for us as real estate investors. I know that that was a big thing, and Trump was butting heads with him when he was in office. Love him or hate him, it's pretty much the only 2 options that you get, I guess, because that's what people do. They either love him to death or they hate him. But he was a real estate guy, and he was pushing Jerome all the time to keep the rates down and things, because that was helping his values on his properties. So just throwing that out there, just it's a little concerning when I heard that we have all this going on and things that are affecting the finances of people so much. As I mean, most people, their biggest asset is their home, and they're losing value every day now in their homes because of the interest rates going up, and we don't have anybody in leadership that's talking to these guys that are raising the rates right now. So take that for how you want, but that was just something that I saw. And you can kind of figure that when whatever happens here in the election cycle, when we have a change of commanders, the next one might end up being another real estate guy, and he's going to fight to get the rates lower, and going to fight to help real estate values because it benefits him and it benefits his people. So if we're talking about when the Fed's going to lower rates, it might be 2 years from now when that happens. So just kind of throwing that out there. I mean, it could happen in 6 months. It could happen. I mean, it could happen over the next year. I just don't know, but that's just kind of was my thinking, and just kind of playing out in my head a little bit that might be the way it happens. I don't know. But where are the current rates? Fed rate, I said, 5 to 5.25. It was unchanged today. SOFR, or the secured overnight financing rate, 5.06. A lot of our bridge lenders will lend off of this rate. If we talk to a bridge guy, a lot of times they're going to say, we're going to be 4 points over the Fed rate, or we're going to be 5 points over SOFR, and they won't lock in a rate today because the rates are changing so much. And they'll say, hey, we're going to be this much over SOFR at closing. And that's about as much as we get from them on, when the rates are going to lock in. The 10-year Treasury is a number that's real important on our end, because that's what our agency debt is based off of. So Freddie and Fannie, you look at that 10-year Treasury, and you can pretty much figure that you're going to be 2 to 2.5 points higher than the 10-year Treasury. When you're looking at your rates to underwrite deals. So right now you're going to be, 5.8 to, 6.75 probably is where your rates are coming in right now with, through Freddie and Fannie. Rates are up. What does that mean? Some of you guys already know, but, if 12 months ago, if you could afford $1 million mortgage, and that was your max mortgage you could afford, now we might be at 500,000 or 600,000 on that same mortgage. So, the houses that people were shopping for that were your, kind of your starter homes, or the homes that sell the quickest, at that 200,000 to 300,000 range. Now those same people that were just barely affording that house aren't able to afford them no more. So the houses are going to sit on the market longer. You're gonna end up paying double now monthly on those same houses. So on those houses, and when you're looking at apartment buildings or commercial buildings, your debt service is going to be messed up, because instead of 100,000 a year on debt, you're going to be 175,000 a year. So you're going to get less proceeds when you go to finance something. What are my lenders saying and doing? I'll talk about the agency lenders on the next page. But we have lenders that are really pushing to, kind of take market share. I read an article in the Scotsman's Guide, this week. The Scotsman's Guide is the mortgage brokers, kind of trade magazine. Said that 40 to 50% of all mortgage brokers are going to leave the business this year, because they're not making any money right now. There's very few deals getting done, and like I said here on the page, we are in a stagnant market as far as the debt right now. So the mortgage brokers, a lot of people are buying on assumable debt, things like that. And mortgage brokers don't get paid on assumable debt. So, a lot of the deals that are happening, there's not even a mortgage broker getting paid. So, and I'm saying all this doesn't mean that, it's all doom and gloom. But, as things go down, it creates opportunities. So, in our business, we're taking it as an opportunity to take market share away from people that aren't able to afford to stay in business right now. So, and you guys as investors, we're investors as well. As people are not able to buy and people are needing to sell, you can be the person that finds creative ways to get in these deals. So. This is something I've had up on the screen ever since February. The 1st of February, Freddie and Fannie came out, and they said that they are going to lean in on deals that are 5 to 50 units. They have big goals. They want to fund 18,000 units in that space each, and roughly $2.5 billion each on 5 to 50 unit properties. So just fair warning, loan amounts on these deals need to be over $1 million. So if you're funding a $5 million deal, you're going to need you can't find too many 5-unit deals in the Midwest here where we're at, in that million range. But you go to the right markets. If you're in Arizona, probably parts of Arizona, Florida, New York, Chicago, places where property values are a little higher. San Francisco, you're gonna find 5 units that kind of meet that $1 million mark on the funding amount. But yeah, they're looking to fund those types of units and to be a resource for smaller investors. So they are mission driven. They were put in place by Congress, and they're looking to fund deals. So